All right, all right, all right. Good evening, everybody. Welcome, welcome, welcome. Let us know where you're from in the chat there. So, if you're a day trader, or you want to be a day trader, and you've been frustrated in this market, you are in the right place. Raghee Horner, who has been trading for 35 years and change, has done it all. Booms, busts, algo-driven chaos, the pandemic, you name it. She's remained consistently, and I do mean consistently, profitable across every single cycle. Tonight, she's pulling back the curtain on the exact morning setups that she uses every day in her room to look for clean, repeatable trades in about an hour a day. So, are you ready? Get ready and help me welcome the Managing Director of Sector Secrets Mastery, the inimitable Raghee Horner. Take it away, Raghee.
Hey, thanks, Bot. Great intro. Thank you, thank you. Loud applause. Thank you, Shakur. All right, we are here for the day trading quick start guide, overcoming today's day trading challenges now, and I do mean now. So thank you, everybody, for being here. Thanks for taking time out of your evening. We're going to be together for about an hour. We're going to cover a lot. So please take some notes. We are going to take questions. And all right, fantastic. I see people from all over the globe. This is great. It's a global trading community. Yeah, it really is. Okay, that's fantastic. All right, so welcome, traders. Again, I am really excited to have you here. And anyone feel like this? Feeling like these markets have been absolutely crazy, going up, going down with no clear path? How about frustrated with either losing money or not seeing account growth or getting whiplashed with these twists and these turns? Yep, I see a lot of yups. Do you wish someone would just tell you what and how to succeed in your day trading in today's market conditions? All right, that is what tonight is all about. Getting right to the point, a quick start of what is happening today, how to stop the bleeding in your account, ease your frustrations, and get your trading where you want it to be. All right. Fantastic. So let me move the clock here, get the clock out of the way. All right, so as we know, there are no guarantees with trading. Trade at your own risk. It could involve substantial risk. I don't want anyone to think that trading is not about managing risk. So this is actually not just a disclosure. This is reality. I think we all know this. A lot of us are living it. All right. So what are the top challenges that day traders are facing today, right now, and probably for a little while? So you might be noticing how difficult it's been. Why? Algorithm-driven price action, extreme volatility, poor timing and execution, emotional burnout, and a lack of a clear edge, right? This is super frustrating. Who's there? Say aye, right? Yes, absolutely. So what is the fix? I mean, that's what we're here for. The fix is really 4 cornerstone ideas. A system built to algo-driven markets, understanding risk management for consistency in growth and profit. And it's not just about profit, gang. We want to grow our accounts. Yes? Learning optimal day trading hours. This is a huge one. This is really important. When we day trade matters a lot. We'll talk about that today. And lastly, and probably most importantly, emotional mastery. Notice I didn't say get rid of your emotions. Emotional mastery and the support of a community. Now, how do I know these are a fix? You might say, Rog, how do you know? Why are you so confident? Because I live it, right? This is my day in, day out. And this is what I'm doing in my day trading account in today's crazy market. So what you see here is a $55,000 account that I had at the end of August of this year. By the end of September, this $55,000 account was about 66,000, almost 67,000. By the end of October, closing in on 80. November, we're really starting to cook with gas here. And as of December 1, just over $115,000. Now, one thing I'm going to add here, and this is really important, notice that as the chop became more persistent, through August, September, remember we had Jerome Powell really helping the markets to newer highs. But when the chop really got persistent, right around September, that's where you see the real acceleration in the power of the day trading. So again, as the chop became more persistent, the account growth really took off. And that's why now is the perfect time to talk about this. And by the way, you don't need this much to start. I don't want anyone disheartened saying, Rog, I'm not trading with a $55,000 account, right? Some of you might be trading with far larger or far smaller. This is just one account, but I wanted to show you the growth within. You don't need this much to start. Everything that I'm going to talk about with you tonight applies to smaller day trading accounts as well as really large ones. I recommend, though, about $5,000 minimum to start. You don't want to start any business, and day trading is a business, undercapitalized. It just makes growing the business tougher, right? It's doable, but it's tough. These trade results, by the way, are from just trading the first hour of the day. And we'll get into that a little bit later on as well. Okay, moving on. Let's talk a little bit about the pattern day trading rule, because we can't not talk about this when it comes to day trading. So what is it? Let's talk about what it is first. So once you make that fourth trade in less than a 5 business day period, you're a pattern day trader. There's a problem with this. It's going to limit how many trades you can take. Now, if you use a margin account, you're susceptible to this. If your day trades make more than 6% of your total trading activity, that's a very small number. So if your day trading makes up more than 6% of your total trading activity, and you're using a margin account, pattern day trading rule, dun dun, right? You are then considered a pattern day trader, and you have to maintain a minimum balance of 25,000. Holy cow. For some folks, that's nothing. For others, that's a good chunk of change. So the big question then is, how do you work around this requirement? It's a really easy workaround. And this is what I do. Use a cash account. Yes, it is that simple. I use a cash account. Long calls, long puts, no fancy multi-leg strategies required. Everything that I showed you on this previous slide, long calls, long puts in a cash account. So keep in mind that the pattern day trading rule does not apply to futures. And yes, I'm going to have some tips for you futures traders out there as well. How many of you trade ETF options, SPY, QQQ, but you also trade micro futures or mini futures, or want to? Okay, very cool. So again, what do I mean by using a cash account? If you have cash, it could be 5K, 10K, 15K, 20K. You don't need to worry about the pattern day trading rule. That's only if you're using a margin account. So we have an easy workaround. You don't have to sweat it anymore. Not with the strategy that I'm going to show you that I've been using for years, decades at this point. All right. So who am I? For those of you that don't know what a Raghee Horner is, if you're wondering who am I, I like to say I've been a student of the market. Yes, I've been a trader, but I've been a student of the market for 35 years. And I think every great trader still sees themselves as a student. I've traded options, futures, stocks. I've traded Forex as well. I've traded crypto. I've traded a lot of things. If there's liquidity, I'll trade it. I've been a day trader. This is what we're going to talk about today. I love swing trading, taking trades overnight, and I love managing a longer term portfolio, right? So there's lots of different strategies that a single trader can use. I've done it all, and I think there's a way that everyone can do it all, but everything needs a strategy. I'm known for being consistently profitable. This was always my goal, consistently profitable. I never wanted to tell my mom that I didn't go to college and I blew up my account. I never want to tell my husband, oh, I made some dumb trades today and I've blown up my account. That's my guiding star. Each year on December 31st, and for 35 years, I've had more money in my account than I did on January 1st of that year. Now, is every year a monster year? Of course not. But I've had a positive year for every year of my trading. I'm a mentor and a teacher, which is probably one of the most satisfying things I've ever had the privilege to do. Every day, I have the privilege to get together with hundreds and hundreds of traders in the Sector Secrets Mastery. I trade live in front of them. Everyone learns together. It's an amazing community. So that's who I am, and that's what I'm all about. So that's what you're listening to tonight. This, as you're seeing, is the Sector Secrets live session schedule. And I'm showing you this because you can see, what I want you to see is there is a way for you to organize your trading life in an effective, almost a minimum effective dose type way. I'm not sitting in front of the screens pushing buy and sell all day. So what is a Sector Secrets Mastery? Okay, Rog, what is this? This is my home base. This is my office with hundreds and hundreds of other traders. This is where we get together every single day to look at the markets, to find high potential trades together while applying the tools and strategies that I've learned over 35 years of being a consistently profitable trader. We're going to get into those tools and strategies today. Having a community and a mentor, both, gang, will very likely increase your odds of managing these chaotic markets. And I can't guarantee anything, so I'll say very likely increase. It's going to make a positive difference. And here's something not too many people know about me. Although some of you do. I can become very easily distracted in almost every other area of my life, right? That person goes, oh my gosh, squirrel, loses their train of thought, sometimes mid-thought. That can be me very often, I'm embarrassed to say. But let me tell you this, with my trading, I am laser focused, all right? So who else here kind of runs into the, yeah, Rog, I get kind of easily distracted. I know I'm not alone here. If I can get laser focused in the trading world, you can too. So I'm not here to tell you I've got this, laser focused approach in all areas of life. No, but because I have a process, I can be laser focused. I have developed a strategy, a plan, and rules that I follow on each and every trade. I know my levels of entry and exit and what I can likely expect the outcome of my trade to be. Here's the important part. Before I get into any trade, figuring out how to manage a trade is like taking off in an airplane and just kind of fixing it in mid-flight. Sometimes it happens, but that should not be how we get into trades. Yes? And risk. I know exactly how many dollars I am putting on the line before I enter a trade. All right? I need and have developed a very repeatable process. All right, how repeatable? All right, I'm gonna tell y'all something. I wasn't planning on having to tell y'all this, but some of you might notice, especially my regulars, I'm a little congested, so I apologize for my vocal tone. I'm sick, and I have been since I returned from visiting my baby sister yesterday. And the reason I'm mentioning this to you all is that when you have a process and you have the kind of tools that I'm going to share with you all today, yeah, you can have a head cold, a chest cold, and maybe a little bit of a fever, and you can function. Ideal, no, right? But you can. And this is so important to me right now. I remember talking to the Trish boss. Many of you know who she is. My partner in the room she said, do you want to delay the webinar? I said, Trish, I'm doing okay. And this is so important. If we delay this by a week or two, everyone's going to miss out. They're going to start to stumble into some really tricky markets and they're going to lose money. That's how important this is to me. Yeah, that's how important. So I apologize for my kind of nasaliness today, but yeah, I'm sick. But that's okay. That's okay. I appreciate y'all being here. So what I mentioned before, I know exactly how many dollars I am putting on the line, again, before I enter a trade. That's not something that I'm going to worry about after I get in. I need and have developed a very repeatable process. That's what 3 decades can do. Just like we rely on some black pants and some khakis in our wardrobe, we know we can count on them, right? I rely on the strategies I have learned because I know I can count on them. And you can too. Who has black pants and khakis? They'll never go out of style. Tried and true. All right. And by the way, this schedule really tells you a lot about, take a look at the times. I really didn't emphasize this a lot, but this is my window for trading. The day trading that we're talking about, that's 1 hour. And then we move on to other styles. So again, learn to organize your trading day to the most effective times for trading. Not when you're available, not because you're bored and have nothing to do, not because you want to press the market and make something happen when it's really not there. There is an optimal way to organize your trading life. And if you've never put a schedule like this together, obviously this is the schedule I keep, please think about that, right? Please do. What time are you trading? How about repeatable process? All right, let's stick with that. So along with the staples of black pants and khakis, my tools are equally as important. As we get ready to jump into some real trading examples, I'm going to show you examples that we've taken in the Sector Secrets Mastery. You're going to see all kinds of colors and lines and zones on the chart. Things are going to be very vivid. So next thing I deal with is I have terrible eyesight. How many here have some iffy eyesight? Cataracts in the eyes. The eyes aren't what they used to be, right? That's me here too. That's me here too. So everything is very vivid, so I can see it clearly. And if you can see it clearly, you can react to it. Confidence comes from understanding what you're looking at. So after decades of being in the market, I've come up with a way to utilize technology. The platforms we have today are so robust in their coding capability. They're able to process so much. We can put together very, very powerful tools. And I've developed this collection of indicators that automatically give me key levels I need to look at, bright and colorfully, again, before I take a trade. So with all the noise out there, and it's a ton of noise, we have to take away the chaos and focus on what really matters. If you look at traders that are struggling, it's noise, gang. It's the noise that's usually getting to them. This is the job of my indicators that I call the top tier tools. Don't get stuck on these because I'll explain them as we go on. Just know that technology is doing for you what decades ago, many of us, myself included, had to do with pencil, calculator, graph paper, if we could even do some of this stuff at all. It was very complicated. So today we've got automated color coding tools that do the work for you on the charts, but they're not black box, gang. I want to remind everybody of this. Everything I'm going to show you on the charts, I'll tell you what it's looking at. There's no such thing as a black box indicator because your brain is not going to understand why it's doing what it's doing, and you're eventually going to lose faith in it because you don't understand, all right? So again, we'll get into all the details. So the more we understand what these tools are telling us, the better off we're going to be. The color coding just makes it simple. So these things do more than I could possibly do on my own. Someone recently told me this, and I really liked it when they were looking at these indicators. I wish I could remember who told me this. They recently told me, we fight algos with algos. And I really like that because that is what we're doing. So let me add this. Let me ask everyone this. How much of your trading process right now is automated? I don't mean entries and exits. I'm not a big fan of that. I mean your trading analysis process. How much of your indicators, your tools, your process is automated? How much clearer do you think your process would be if you did automate your analysis? I'm not talking about letting a robot run off and do things. I'm not a fan of that. I'm talking about automating your process, taking a stick shift and going to an automatic. Here's a big one. Here's a really big question. How much less emotional would you be if you automated the analysis on your chart. It's a lot to think about. I see a lot of percentages there. Okay, so I love that y'all are thinking about that. It's something very important to think about. Now, what do I seek for my analysis? If you're wondering what my percentage is that's automated, I'll say 98% because I do one thing manually. I cut ranges in half manually. Other than that, I'd say 98, 99% of my trading analysis, my chart analysis is automated. And you're going to see how and why we do that. So let's take a look at some of the day trades that we've taken in the last few months. Yeah, let's get to it. And while we're doing this, I'll go through some of these tools and what they do. So this is an example of the QQQ from the hourly price movement range. And you'll see I've marked up these charts. The hourly price movement range is right here, these green and red zones. Yep, so you see how we sunk into the green zone? That told me that when price sunk down to this level, buying the QQQ, which at the time was $365 or $3.65, was the right point of entry. So what is an hourly price movement range, Rog? What is it? I call them HPMRs because hourly price movement range is a lot to spit out. All right, these are these red and green zones on my chart, on these 5-minute charts. Green zones are support. Red zones are resistance, period. This is a proprietary price and volatility X-ray vision tool, all right? Which, by the way, doesn't exist anywhere else because I created these for myself over a decade ago. Which, by the way, once upon a time, I did these manually. I'd spend the weekend calculating these manually. Now it's automatic. So again, hourly price movement range, HPMR, what it does is it takes the last, so this is important. Whenever you're using a tool, you've got to understand what it's considering and what it's yielding. What is it telling you? So HPMRs take the last up to 6 months of prior price movement. 6 months, not the last 6 hours, not the last 6 minutes, 6 months. And it puts it together, it curates it, so you can have a very data-driven oriented expectation of where price is most likely to go, in the case of these hourly price movement ranges, in the next hour. Notice they shift every hour. Did you know that volatility is not the same all day long? Some of you probably do. So it shifts every hour. 9 to 10 is very different than 10 to 11, etc. So what makes this tool that I've created, this proprietary tool, so special? There is an extreme amount of data that goes into this algorithm. 6 months of price action for each symbol. And that's what gives us these levels. It's actually thousands of data points that are considered to place these zones with 68% accuracy. So they're going to be correct just over 2/3 of the time. Nothing is correct 100%, gang. But if someone tells you this happens almost 70% of the time, that's a very good probability, isn't it? This trade could have been taken with NASDAQ futures. So even though I'm using the QQQ, you could have traded NQ, you could have traded MNQ, the micro. I don't trade NDX, but heck yeah, you could do that too. In this case, I used a QQQ ETF, which is one way to set up trades. And I'm going to mention this too. If you want to trade futures eventually, start with the QQQ. All right, but by looking at the NQ futures, what you're getting is a symbol that's been trading for hours before the opening bell. So whenever I trade QQQ, I'm going to look at the NQ. And if you're trading SPY, DIA, GLD, I'm going to tell you right now, use the futures. It's going to give you a nice running start. It gives you a more complete look at the price behavior. The difference between larger and smaller accounts, by the way, is simply the number of contracts you can afford to trade, but the setup stays the same. So yeah, absolutely, a $5,000 account could have traded a $365 option, right? Probably a couple of them. And a much larger account might have traded 10 or 20 of these. It is truly just a matter of how many contracts. The gains per contract stay the same. In this case, the profit was $920. The risk on the trade was 92 cents per contract. The reward was $5.55 or $555. So that's better than 5x return on risk. And we're going to talk about risk reward in this conversation. So what I'm seeing hour by hour is an automated range, gang. What makes the range is time and price. What is the typical number of points a particular symbol is most likely to trade? So these are just support and resistance levels done in a very unique way, but I rely on this kind of information. So as I mentioned before, you fight algos with algos. I love that. All right. Let's move on to our next example. And someone asked about losses. Yeah, let me go through these examples of the indicators and what we did. And then, yes, I will talk about win rates, losses, upside down risk rewards. Absolutely. No problem. Because we've got them, If my win rate, by the way, is roughly 62 to 72% on average, every 10 trades, I'm losing 3 or 4 times. But it's how much we lose. We'll definitely get into that. It's a great question. We'll definitely get into that. All right, next up. Having the ability to grow a small or medium or frankly large sized account is one of the benefits of day trading. But I'm going to talk to my small and medium sized account folks for a moment. So if you're wondering, Rog, what would make something a small or medium sized account? I would say anything under $10,000 to $20,000. All right. So number one, futures margins are lower because most brokers offer day trading margin. So in this example of IBIT, the futures alternative, by the way, is BTC. There's a full size and a micro as well. So futures margins are lower because most brokers offer day trading margin, and the cost of options is also lower because the option expiration that I am buying is the closest expiration that has good open interest. Now, what do I mean by closest? We have a lot of 0 days to options expiration in QQQ, SPY, GLD, and sometimes I'll have to go out to Friday if I'm trading a stock or an ETF, but I will go to the closest expiration that has at least, you might want to write this down, 750 to 1,000 open interest, no less. Okay, so in this example of IBIT, which is the Bitcoin Trust ETF, each option cost $150 or $1.50. All right, so $1.50 would be what you see on your option chain, and that's $150. And it rallied to nearly $300 in one session. The risk on the trade was $35 per contract. So for those of you that are wondering, Rob, what do your losses look like? If I bought this for $150, I'm risking approximately $35. So if every one of these examples were a loss, right, I can go through what the loss numbers would be as well. I'd lose $35 or 35 cents, depending on whether you want to use the dollars or the option price, to give you an idea. So again, rallied to almost $300 in one session. $35 per contract risk, which means that in this case, even a move to 310 would be about a 1 to 2 risk reward. We'll talk more about risk reward. Way too often, sadly, day traders bet too big. They risk too much of their account. What's too much for day trading? I would say easily anything over 2.5% to 3% in this current environment. So if you're risking 10% of your account in a day trade, you're actually risking blowing up. And what happens even more so is they don't see the returns they're looking for. Often they risk more than the initial target of the trade. This is trading with an upside down risk reward. If you're risking more than you can make, and it's going to lead almost inevitably to blowing up your account. So put it another way, taking 100% risk, which is what a lot of options traders do, max debit, and maybe a 25 or 50% reward will not work in the long run. The math is working against you. And I'll tell you this, nearly all losing day traders will habitually risk more than their targets could return. And then what happens is they need an unreasonably high win rate to even keep their accounts positive. So they need this crazy high win rate where maybe they're only losing once or twice out of every 10 trades, which is unsustainable, by the way. But it's because they're risking more than they could make. Don't behave like the 90% of day traders lose. They lose because they're risking more than they could make. So quick fix, don't behave like the 90%. What are the 10% who are winning? What do they do? One of the keys is they work the math in their favor. They're not going to risk more than they can make. The solution, by the way, okay, now that we know what to avoid, the solution is position sizing and risk management. I gave you a little cue that I use on position sizing. Again, don't risk more than 2.5% to 3% of your account. That's a maximum. If you want to be lower than that, no problem. Okay? So the solution is position sizing, and risk management on setups that have a high degree of follow through, like IBIT did. All right, and we're going to talk about follow through and cues on these charts in a moment. But a question I get a lot is, what time frame do you use for day trading? And you'll notice every one of these charts is a 5-minute chart. And I've used everything from tick charts to 1-minute charts to 3-minute charts to even 15-minute charts. But testing and trading has shown me that the 5-minute chart works best for these setups that I'm going to show you. Why? Why does it work best? It slows things down without making me miss great entries. And here's the important part. While being able to hold on to those big winners without getting wicked out watching every little twitchy short-term candle. Another question is, how many day trades can I expect? As I mentioned before, I've organized my trading life to day trade about an hour a day. Right now, we're averaging about 2 to 4 trade entries between 9:35 and 10:35. So I've given you all another cue there. Don't start your day trading until 5 minutes after the bell. And I have a hard stop on new entries at 10:35. And I follow this rule to the second. Just 1 hour a day. And by the way, gang, that's not about hype. This is not 8-minute abs. It's about what is the most effective way to day trade. More is not better. How many traders thought, well, I'll just day trade my way out of a hole? You end up digging a deeper hole, yes? Who's been there? I sure have. More is not better. Over trading is one of the main reasons day traders specifically fail. They're there in front of the charts. They've got 5-minute chart setups. They'll just keep rattling off those trades. Very dangerous habit. And a really tough habit to break, by the way. Okay, next up. This is actually an example of GC futures. So let's flip it around on its head. If you're not trading futures, you'll trade the GLD ETF. Okay? So GC futures, there's also an MGC. So just to give you all the flexibility on the symbols, it doesn't have to be GC. It can be MGC, which is micro gold, or it could be GLD, the ETF. All right. So in this case, I used a Darvis support level on the GC full size. And by the way, in this example, I had both. I had GLD calls and I bought the GC futures. So you can do both. I don't want anyone thinking you have to choose one or the other. All right. So you see this yellow line right in here? That's automated. That's an automated yellow line of support. That was my level of entry. And by the way, you can see it, touched again, got a little below it. But 40.70 was my entry. That is where that automated support level was. The trade went from 40.70 to 41.30. This was a really nice day trade, which is a $6,000 move in a single contract of GC, or a $600 move in a single contract of MGC. So what is the Darvis? Right? Again, no black boxes here. This is the modernization of Nicholas Darvis's Darvis box. Nicholas Darvis was a trader in the late 50s and 60s. That's how long these levels have been around. Talk about time tested. And what they do is they automate key support and resistance levels on any chart, any time frame. What it's looking for is a price pattern within a given set of candles. So if that price pattern occurs, these support and resistance levels will automatically plot. It's price-based support and resistance. Call it a floor, a ceiling, call it supply, call it demand, it doesn't matter. The levels are there based on a recurring price pattern that's been valid for, gosh, at this point, 60 plus years. So why does it matter, the Darvis and automating it? Automating these levels based on this time-tested process allows any trader to find support and resistance instantly without error and bias, right? Emotions will start to play. If you're long, you'll notice all the things that agree with your open position. Automation eliminates that. So again, what does it tell us? It's support and resistance. Support is usually where the buyers are waiting, and resistance is usually where the sellers are waiting. So again, I'm automating these levels. Day trading has to be and can be simple. One time frame and a set of core entry setups that are automated. By the way, I use really more often than not, no more than 2, sometimes 3, but mostly 2 core setups. And new traders, to avoid overwhelm, heck, you can focus on just 1 core setup. Most of my core setups are going to be the hourly price movement range and the Darvis, and I also have a trend following, okay? So again, automated simply means, think of it like a manual transmission, a stick shift, and an automatic transmission, yes? So I can push the clutch in, let off the gas, shift, get back on the gas, let the clutch out. I can do all that manually, or I could have an automatic transmission do it for me. I was at the track with my husband not too long ago, by the way, and both of us have track cars that are manual transmission, both 6-gear manual transmission. You know, the automated paddle shifters almost always outperform on the track because it's less for that driver to have to deal with. So the automation is taking something you could do manually, coding that process into your platform, and letting your platform do the thing that once upon a time you would have had to have learned how to do. Hopefully you're doing it right, not overlooking something. The computer, the data, it doesn't care. Either that process yields a support or resistance level or it doesn't. That's the beauty of automation, okay? So again, I use no more than 2 to 3 core setups. If you're out there with 9 setups, go study your entries, find the top 2 or 3 that are making you the most money, go all in on those, all right? So again, a new trader, focus on just 1 setup. That's okay. Now here's one big difference between winning and losing traders. The key is knowing which will work best in chop versus trending markets, and being able to recognize each in real time. So here's how I do this easily. So again, it's automation. Notice the candles before this setup on the gold futures chart were mostly yellow, a little bit of red, but mostly yellow. I had a neutral or yellow environment. So the yellow candles are neutral. Price was above, and here's another really important level to know. Price was above the previous session close, which is the cash close of the previous day. You'll see that the color candles tell me it's neutral. The previous session close told me we were above it. We have this handy dandy label, just so we know what the 4 p.m. cash close of the last session was. Really simple. Then the support level was reached, which is that automated yellow level. Process gang. Yeah. Now here's the important part. As the day went on, how many here have a hard time letting winners run? How many here struggle with letting winners run? Here's how we fix this. Notice that the day went on, We want to be able to let winners run, something we all want to have the ability to do, was strengthened visually. Like I said, I'm nearsighted as all get out. What could I see? The consistency of these green candles. If I were to look at most of this day when it was done, I'll notice that it was dominated by green candles. Yes, the yellows and reds reared their ugly little neutral and bearish heads from time to time, but for the most part, the green bullish candles led the way. Now, the way I interpret this also is another tool that's sitting very quietly, but very effectively at the bottom of this chart. This is something called the multi-structure. So by the way, these colors, again, green is bullish, yellow is neutral, red is bearish. They're all based loosely on whether or not price is above or below the 34-period exponential moving average. So again, no black boxes here, gang. Take something manual, make it automatic. There's a few other things in the code, but the green candles tell me there's bullish participation, bullish momentum, and bullish trend. The very bottom here, I'm also looking at market structure. So notice these two rows of colors at the bottom of the chart. You want to hang on to winners when the trend shows up. Green momentum over green trend, you're sure as heck not buying puts. So it keeps you from doing the dumb thing, right? And you notice to let this trade run because the structure suggests that that's the flow, period. And by the way, again, these are basically looking at the relationship between the 8, 13, 21, and 34 exponential moving averages. Again, there's other things in the code, but the foundation is basically that. So this setup was using the automated Darvas support, the automated top-tier green candles, and the multi-structure. Again, the idea being if the level is automated, if the analysis is automated, it's easier to see and react with less emotion, less error. That is where many day traders struggle. The automation fixes the problem in an instant. So we want to find our support levels, and then we want to find what the most likely follow through is going to be. And then we trust our tools, we trust our gauges. All right. The key to big day trades, everyone wants a big day trade, right? Like gold every day, right? But the key to big day trades is not having a crystal ball. As I like to joke, mine's been in the shop for 30 plus years. The key is position sizing using a fixed budget. What do I mean by fixed budget? Do not size one day trade larger than another because it's a perfect setup. By the way, gang, perfect setups don't exist. Either the trade meets the criteria or it doesn't. Now, the more criteria it meets, the better. But even then, gang, it doesn't guarantee a win. So if you use a fixed budget, you're just accepting that every trade could move in your favor. And you're not going to somehow think that we know the future and bet larger on one because it's a great symbol and less on another because it's not. That's emotional. That's greed-driven sizing. Another key is buying at least 3 contracts for up to 3 targets, or basically having enough contracts to benefit from a prolonged intraday move. One of the biggest mistakes I see day traders make is they buy one contract, one thing, and it hits the first target and they don't want to scale out because what if it keeps going, right? What if it keeps going? So you want enough contracts so you can pay yourself as it goes in your favor. One contract is a very dangerous place to be because if it keeps going, you'll get greedy without realizing a profit. And then oftentimes what happens? It turns around and we all think, well, if only it gets back to that level, I'll get out then. The third big key is trusting your indicators to keep you in the trade. Or as we say in the Sector Secrets Mastery, trade what we see, not what we think. In the case of the Russell, it began with the session in bearish territory. How do I know it's bearish territory? Really simple. The previous session close, or as we like to call the P, let me grab the right tool here, the PSC, or the previous session close. We were below that. That's bearish territory. Think of the previous session cash close as a line in the sand. That's what I call it. It's a line in the sand for that day's sentiment. It's bullish above, it's bearish below. If you want a simple cue that's going to increase your winning trades, your win rate, your follow through, use the previous session close before taking any trade. Don't buy puts above the previous session close and don't buy calls below. The next is the top tier candles. So again, we talked a little bit about this. They're color-coded candles that calculate momentum, trend, and participation. They loosely use the 34 EMA, and we have a few other things in the code to let us know if that candle is moving with participation or not. What do they tell us? Red is bearish, yellow is neutral, green is bullish. The lighter shades are the up close, while the darker shade is a down close. Having the confidence of the highest probability in follow through is key in day trading. So if I see that we're below the previous session close, that we've hit a resistance level, what I'll do is say, you know what? We're in bearish territory and we just hit a ceiling. And the probability is likely lower lows. And in the beginning, it may not seem really clear. And a lot of traders ask me, hey, Rog, how do you prevent getting kind of taken out of a trade beforehand, before it could really start to drop? The way you do that is make sure, number one, you're not buying puts into lower lows. Notice we are buying puts from resistance, from highs. So if the market bounces a little bit, we're not getting taken out. Once I start to see more red candles appear, now I know, okay, the bears are starting to show up. And even when it goes neutral, I know that the bears are, for the most part, in control. So the color coding helps a lot. The main thing about rules like the previous session close and waiting for resistance levels to buy puts or support levels to buy calls, getting really specific about exactly what I need to see in the right bullish or bearish territory, what it does is it prevents over trading. You're looking for something very specific, and it increases the likelihood of holding on to a winner. Most day traders just see candles moving in any which direction and make a decision. We're waiting for candles to be in bearish or bullish territory, reaching a very specific zone, and then we're engaging. The Russell, again, was below the previous session close and printed bearish top tier candles throughout the session, keeping the bearish follow through most likely. This is how a $135 option can follow through to a $600 option, or darn near a 600% return in a session. The risk on the trade. So you might say, Rog, what if you were wrong and this thing just went straight up? Where would you get out? The risk on this trade is $35 per contract. So when I get in and I bought this thing for 135 bucks, my risk was $35 per contract. So you're starting to see how the automated tools, things that we could have done manually, and now we're automating, starts to increase some confidence, starts to stack up and create that repeatable process. So again, on any one of these trades, if you want to know, hey, Rog, if it didn't go in your favor, how would it have gone? I'm happy to give you the number. Okay, next up. This one is the DIA. So if you wanted to trade YM or MYM, it would apply. And then DIA is the ETF for the Dow. And a trader, we never set up a trade looking for a double. I know everyone said we want to make 100%, right? That part is up to the market. A smart trader lets the trade unfold while taking profit. So this wasn't entry to exit. Along the way, I'm paying myself up to 3 times. All right. The key is smart entries where the entry setup is known before the trade triggers. And with sound risk management and position sizing, which is related to risk management, all of these being determined before the entry. So I know where I'm getting in. I know what my risk is before I've gotten in. right? I know where my first target is before I've gotten in. That's what a trading plan is, gang. Entry, stop loss, first target before the entry is even reached. In this case, the Dow sunk into the hourly price movement range and triggered a DIA call. So this is what we did in the room that day. The entry was $305 per contract. So again, it's good for any sized account. The risk was $77. Notice it's not $305. That's what most traders do. They'll use the entire amount they paid for the option as risk. Never do that. Never, never do that. We ended the contract and we closed it out at $740. And again, remember, futures traders could have traded the YM at the same trigger or the MYM, because when I'm trading the DIA, what have you learned today? I'm actually watching the YM. All right? It's exact same setup, exact same zone. And for those of you wondering, am I scanning hundreds of symbols to do this? One of the things that a lot of day traders do is they scan too much. They scan way too much. I don't want to look at hundreds of stocks. I don't want to chase hundreds of headlines. I don't want to chase the things that have gapped up or gapped down. I'm starting my day trading morning off by looking at, you ready? This is where you want to start. NASDAQ, S&P, Dow, Russell, crude oil, gold, bonds, and Bitcoin. I'm looking at 8 things. That's top of the food chain, by the way. Okay, that's top of the food chain. Because if I'm going to trade a NASDAQ stock or sector, semiconductors, Taiwan Semi, Qualcomm, NVIDIA, or if I'm going to trade financials or the JP Morgan, Bank of America, Wells Fargo stocks, they all have an index that they belong to. And that alignment is really important. So one of the biggest mistakes day traders make is they look at too much. Okay, so would I use a scanner? I absolutely do not. I absolutely do not. Because I'm going to look at a fixed list that will tell me more about what's going on under the surface. If I want to trade NVIDIA, what do I want to see strong? NASDAQ and the SMH ETF. If I want to trade healthcare, let's say I want to trade AbbVie, what do I need to see strong? Preferably the Dow and S&P, the XLV, and then lastly the stock. Day traders typically look at way too much and they're not prioritizing alignment. Yeah, so there's a couple of moving parts, but what you trade is just as, if not more important than how you trade it. And yes, for the most part, gang, my risk is going to be 25% of premium paid. So I keep mentioning, if you buy something for $100, are you going to risk $100? No, you're going to risk approximately $25. Okay. Another question was asked earlier, was a good question, is how do you avoid getting stopped out on the dips? Dan, the way we do that, and yes, sometimes I will if the dip is dippy enough. Yeah, it's going to happen. But what we do is we place targets along the path. First target is always known. If the first target gets taken out, we'll then look at a second. If the second target gets taken out, and it's going to be one of those days like gold that just continue to grind up all day, the third target is time. So I'm paying myself as the trade is going along, and I'm moving the stop up in my favor. So eventually, I am going to get stopped out. But avoiding the dips, you know what the issue is not, see, most traders, Dan, you ask a great question. Most traders buy, I'll give you a great example. Instead of buying at the lows like we did, buying off support, buying off a floor, they buy into the rally. They buy into a new high. And then when the market dips, their tolerance for that move against them is really low. Yeah? So the best way is just get a good low price to begin with. There's an old saying about Wall Street. Wall Street's the only place they throw a sale and nobody comes. The price that you pay is very important. So what I focus on is not momentum breakout trading. I don't recommend that. What I focus on is if something reaches a support level and it's in bullish territory, and I've got reason to believe that there's going to be follow through, buy the dip. Don't buy the rip. Traders who buy the rip will have a very hard time hanging on during the dip. So those zones matter a lot. Buying off the Darvis support, buying off the HPMR support is really important. Another question was, sometimes the spread is too big in some stocks, so I don't use their options. How do I handle big spreads? Remember, BBM, spreads are risk. If the spread is wider on the option than 10% of the bid price, I will not trade it. I will not trade it. Okay? So again, what I'm looking for is it in bullish territory? Is it showing me the signs of potential follow through, buy off support? Is something in bearish territory, like the example of the Russell, which, by the way, you could trade IWM, you could trade RTY, you can trade the micro. Is it in bearish territory? It was. Can I buy the put or short the futures contract off resistance? Remember, gang, 90% of traders buy into higher highs and short into lower lows. We are doing the opposite. We're taking advantage of that inflection point because we have the automation of these zones that suggest that's where the selling pressure, that's where the ceiling, the supply, however you want to look at it, that's where that's mostly likely to shift, right? I don't usually trade shares, although of course you can because the triggers are the same. But I'll usually try to use the leverage of futures or options. That's usually my preference there. All right, great questions, gang. All right, so that leads us to, what have we learned so far tonight? Putting a lot of pieces together. Just a quick recap. A clear trading plan. Having a clear trading plan to use in today's market is absolutely possible. What is a trading plan? What is the bearish or bullish tendency of the market? Remember that previous session close. Are we more likely to see bearishness or are we more likely to see bullishness? Then I find my zone. Automate it. Darvis, hourly price movement range. Then I want to find my first target, all the while knowing I'm risking about 25% on premium paid. Okay? You can do this now. This is not going to be a difficult thing to do. What else do we want to embrace? Tools and automation. Get the right tools together and let them do the work for you. So no more trying to navigate what algorithms out there are doing and trying to, second guess the math. We're never going to keep up. We want to be able to automate the volatility, which is the typical nature of the market. We want to set up our charts and let your mind be at ease, shut the noise off, quit worrying about what someone else is saying, and reading the automated indicators, which in my case, I love to color code them. Lastly, we've got to be process driven. Every single example I showed you was a repeatable process of 2 of my core setups. Knowing how to time and execute your trades in a process driven manner will save you mental fatigue. So will sticking with just the first hour of the day. And those kinds of processes and rules will get you where you want to be. Okay? Question about how am I getting out of these trades at 1600 at 4 p.m.? Dale, the entries are between 9:35 and 10:35. But if the trade's going to continue to keep moving in my favor, I'll let it go. I'll let it keep going, but I won't enter new trades after 10:35. So that makes sense. So I'm not going to keep trading throughout the day. That's what losing traders do. Right? What I'll do though is say, hey, look, if I hit my first target, let's move our stop. We hit a second target, let's move our stop. Right? And all those levels are automated. So at the end of the day, it's time that gets me out. Okay? And these are my tools, gang. What you've seen there are my tools. I'll talk about some of my other tools in a moment, but who's ready for the quick start guide? We've talked about a lot of things, position sizing, stop losses, futures. Hopefully this is a lot of things to get you percolating. Well, this is what we're doing coming up. We have a day trading quick start class coming up. The basic, the pro and the elite. This is what we're going to be doing a week from today. So this is something I've never done before. And quite frankly, gang, I wasn't planning on doing this. But so many traders are unnecessarily losing money and they're not seeing the success they want in today's markets. They want help now. What is going on? How come my other strategy wasn't working? They're struggling. So think of the quick start guide this way. You're trying to assemble a new piece of furniture. You get the directions step by step. But Trish Boss was talking to me about this. She said, Rog, you know how you open up a new product and they have the guide that's an inch thick in 9 different languages? And then they have that really short guide with easy pictures that tells you, do this step 1, do this step 2, do this step 3. She goes, that is what we need. That's what traders need right now. Right? The step-by-step directions that give you the details and nuances to put something together without reading a dictionary and encyclopedia about this piece of furniture, right? You can spend a huge chunk of time learning every nut and bolt, or you could just turn to that sheet of paper that gives you that quick start guide and put that piece of furniture together. The automation allows us to do this. The steps of what tools you need and how to put them together without all the theory and the explainers and the history, blah, blah, blah. It's super nice when someone just directly tells you what you need to do and why it works. Here are the tools you'll need. This is what this program is all about. By the way, why am I doing this now? This was not on my bingo card. A lot of day traders are struggling. This struggle, by the way, gang, has been happening easily since September, October, and it will likely last at a minimum into mid-year. And it has a lot to do with things that I haven't covered in the conversation, but it has a lot to do with monetary policy, uncertainty about the Federal Reserve, uncertainty, fill in the blank, everything that we've been dealing with so far this year. This is what's been challenging us traders to survive in this market chaos. And I am sad to say it is not ending anytime soon. We are seeing this right now. This is what we have to deal with. And the struggle does not have to be a reality. It's not our reality in the room. I'll tell you that much. And that's why we decided to do this. So the quick start class is going to be on the 15th. When I tell you quick start, I mean it. I mean, I'm going to tell you what we're going to do, why we're doing it, the tools that we're using, and we're going to get together Monday from 1 to 4 p.m. Eastern. We're going to get through this guide together, the quick start guide, tell you what you need to do so you can get to work with it on the 16th. These are Sector Secrets live sessions, by the way. I talked about where I hang out, my office, my home base. So this is where we put all our skills and tools to work 5 days a week. So I start the room at 9:20 Eastern. So 15 minutes before I even put on the first trade. And we go to about 10:30, 10:35. This is the time we dedicate to finding the best symbols to day trade. Typically, again, 2 to 4 trades a day in the current markets. We'll also walk through how to set up the trades, manage each leg of the trade. I give you the entire trading plan: entry, exit, stop loss, first, second, and up to 3 targets. So with your 30-day membership, you're going to have access to the room, which actually you can stream the room, as well as the alerts through the mobile app for swing trades and long-term account growth position trading. Day trading, I want you to do in the room with me. Just 1 hour. The day you sign up for the class is when you start getting full access to the mastery. For example, if you sign up today, right now, we'll be seeing each other in the morning to start trading and learning together. So this is going to be until the 15th. This offer ends on the 15th, the day of the class. The quick start, that's going to be it. I mean, it's a really time-sensitive thing. This is what we're dealing with right now. So what else do you get with your Sector Secrets Mastery membership? It's not just day trading. That's a huge part of what I do. It's a huge part of why traders are struggling. But you'll get the top tier outlook. It's a big picture premium and macro report. Daily notes. So every single day, the notes I personally take are sent to you live. Day trading setups, economic events, trading strategies, links to resources. I make my personal notes available to members every single day. And then a learning center. This is your library of helpful videos broken down by topic. So it might be, can I afford this trade? There's a video for that. We even have a spreadsheet that automates that. How much should I risk? There's a video for that. And again, the spreadsheet automates it. So automation is a big part of what I do, right down to position sizing. We have a self-paced getting started series for members to answer those important frequently asked questions. All right. So again, we want you to get started as quickly and as easily as possible. All right. What else are you going to get? So all those color-coded candles that I was showing you, those are called the top tier GRAY candles, green, red, and yellow candles. Those are the candles that give me the confidence visually to understand if something's in an uptrend, downtrend, bullish, bearish, going neutral, right? The color of the candles are really important. We didn't go over the top tier dots, but those are a really cool way to find support and resistance and acceleration in the markets. The Darvas 3.0, that was an automated support and resistance tool that I share with you all, where we've taken that work from Nicholas Darvas and modernized it for today's markets. The multi-structure, you might remember where I said we need to be able to find real time if the market's in chop or trend. The multi-structure, we have these handy dandy labels we call the trade flags that let you know if there's bullish momentum, bullish trend, bearish, neutral, etc. We simplify that. And then lastly, the secret squiggle. I know it's a silly name, but it's the most important overbought, oversold indicator that you can use. So if you're looking at chop and you're asking yourself, could this be bottoming out at the floor? Ask the secret squiggle. So again, we've automated all these things. This is my toolkit to navigate, well, frankly, any market, but it's even more important right now. We talked about the hourly price movement range indicator. So we're including this in the elite package. Hourly price movement ranges are a dynamic indicator that require updates about every 3 weeks. The price movement in the symbol is what dictates what needs to be updated. So these are not static. We go through about 100 symbols in stocks, and we have a pretty extensive futures list as well. The HPMR is that symbol's price and volatility history. What has the symbol been doing for about the last 6 months? We take that data, we automatically plot the support and resistance levels. So as traders, we're always in search of probabilities. What's the probability something can go to a certain level and stop, right? Hourly price movement ranges give us the look back of where the symbol has been operating in terms of a price range so that we have a far better perspective of where it's likely going. By the way, my Sector Secrets Mastery folks, how many of my VIP Sector Secrets folks are Sector Fu Mojo Dojo trading room people? How many of you are in the room today? How many of you are annual members, by the way? How many of you, Sector annual members? If you are a Sector Secrets annual member, you get the class for free. All right? Wearing the t-shirt right now, I love it. If you're an annual member, you get the class for free. Call the office and they'll give you the discount. Membership has its privileges. All right. So the hourly price movement range subscription you have is far more than just the futures. It's a huge list of ETFs. It's a huge list of actively traded stocks. Also crypto. Also different crypto symbols. All right. All right. So you're probably thinking, okay, Rog, you just went over a lot of cool tools that you tell me you used to make these trades. So you're probably thinking, great, I get all these tools, but how the heck do I set them up so I can use them? You know, the biggest bottleneck we hear from traders who kind of give up on trading is the tech. That's the main constraint. So before we get on the class, this Friday, when I tell you, gang, this is a quick start, this is something we're doing right now, I mean it. This Friday, we're going to do our pre-class indicator package and hourly price movement range setup session. So this is your opportunity to set up the indicators before we get together on the class on Monday. There is nothing worse than getting a new tool or a new toy and not knowing how to use it. This will not happen here. We give you everything you need to start with a solid foundation, including the tech. Remember, quick start. No digging around for information skills that you need now. No dictionary, history, encyclopedia, right? This is going to be right to the point, get you started. So this session, like all the others, is going to be recorded. So if you have to go back to it at any time, pause, rewind, etc., you can do that at your leisure as often as you'd like. And don't take my word for it, gang. You know, yes, I've been doing this for 30 plus years. Of course, Rog, this works for you. This is what our members are saying. This is what members, clients of the Sector Secrets Mastery are saying. This is working for them. Okay. So I think that matters a lot when people that are probably sitting where you are right now are saying, you know what, this is how I turn the corner. So I think that's super important. And I love that our members are getting the results that they're looking for. If you need more information, there's the phone number. Again, my annual Sector Secrets Mastery members, if you're not an annual now and you're right on the cusp of sign up, here's a great reason to do it. You get the class for free. There are interest-free payments with PayPal credit. So if you want to check that out, that is something we offer. And then again, class is on Monday, gang. It's barely a week from today. And again, what you'll get in each one of the packages, if you say, Rag, I'm all in. I want to be in the room with you all. I want the top tier pro indicator package. I want the HPMRs. And I want the class. Great. My annual members or members who might have some of these tools already, the basic class will be great. And again, my annual members, remember, you better be there. The class is free for you all. I am very looking forward to seeing y'all there. You can head on over to simplertrading.com/quick-start or give them a call at the office. All right. Any questions that I might have missed? So, by the way, the class that we're doing is to get everyone started right now, right? That's really it. So the class is on Monday. Yeah, it's a week from today. So it's the time crunch is a real one. One of the things that we're dealing with right now is this odd window between the FOMC that's on Wednesday. So we have this interesting little window right now where there's a little bit of lull in the action. So traders can take some time. I mean, literally this week, start getting their charting ready, join me in the room. And then on Monday, which will be the first Monday of trading after we hear from the FOMC and Jerome Powell, I'm actually looking for the day trading to pick right back up on the pace that it has been with the follow through. So that this is very specific to a window of time. And again, this is going to serve you well into your trading career, but most definitely with the volatility that we're seeing now. All right. Mookie, yeah, you asked me about the P&L. Yeah, this is the P&L that I shared with you all in the beginning of the session since the end of August. And what I really wanted to show you all with this P&L was that when things got really volatile towards the end of September, right here, the trajectory of the P&L really took off. Now, I don't want to guarantee anything to anybody in terms of expectation, but you usually have a better memory about this than I do. We spent about a week? No, 2 weeks. 1 week we had a 100% win rate, which I'm not going to tell anybody is normal, but it's actually been more normal than not to have an abnormally high win rate. And that's because of the volatility. Now, there are going to be certain windows that get a little trickier, and that's usually going to be about a week before the FOMC, which is why the timing of the class is perfect. And then what you can ultimately do is use this process through any kind of market environment. And what a lot of you are going to realize once you learn this process, and especially if you join me in the mastery, this will actually extend to every style of trading that you'll use. The same process can apply to any style. If you want to start trading overnight, swing trades, etc. Yep. Let's see what else we have here. As far as futures and options, Joe, I will talk about the setups with ETFs, stocks, and futures. But remember, what we're charting is what we're mostly looking at. So if you're wondering, Rob, what am I going to learn in the class for futures and options? You're going to learn the zones of entry. So just like when I showed you all the QQQ, whether you take NQ, whether you take MNQ, whether you take QQQ, the setup is exactly the same. I'll give you all some nuances around that. But the setup is really what I want everyone to be able to identify: where to get in, where the targets are, and how much is allowable risk, which we covered a little bit here today. All right. Nopium says, for real, I hate to share this best kept secret. I don't get anything for promoting this class except the joy of knowing that someone else can be helped by Raghee and Lorna, the best. Nopium, I really appreciate that. No, thank you. And I said, I can tell you this is great, and I can tell you this works for me. But when our members tell you that it's been a huge shift in their trading, when you teach, there's nothing more satisfying than that. So Mookie, that's the P&L. And I'm not going to tell anybody that 80+% is realistic, but in this volatility, gang, it's been a needle mover. Yeah, you don't need to get chopped up by this volatility. And this is the quick start guide for that. All right. Monthly and quarterlies can upgrade to annual sub, and that's how you can get the class for free. So I wanted to let you all know that. And then again, remember, simplertrading.com/quick start, or give us a call. All right. Was 55,000 a magic number? Ta, you can work with as little as $5,000 or $7,000. I have a day trading account that's about 3.5 times that size, and it grew at the same rate. I didn't use the bigger account, to be quite frank, because I didn't want anyone intimidated thinking they need $160,000, but that same ascent of P&L was in that. I wanted to use something a little bit smaller, but you can start as small as 5 to 7K. Again, I don't want to encourage small account thinking, but yes, you can. You can. Okay. All right, gang. I don't want to keep you too much later. I know kickoff. Sorry about the coughing. I know kickoff's about to start. My football fans out there, thank you so much for your time. Man, the idea, gang, is this: overthinking, tension, fear of mistakes, trying too hard. All of this is keeping us from being great traders. What this class is going to do is get you present. We're starting now. Get you grounded, get you trusting, and get you committed to growing your day trading account. And that's really it, gang. All right? The time is now. This volatility is fantastic. I'm going to get rid of this cold. I will. Thanks, Fly. And thank you so much, gang, for the time. All right. Be good to each other, gang. And I'm looking forward to seeing you Monday in the class, or even better, tomorrow in the room. Until then.